Hello guys, and welcome back to School of Stock Markets YouTube channel, and we are back with another stock research for all of you. And today the company we are going to do research is Maithan Alloys Limited. So Maithan Alloys Limited, let's see about the company, what this company is and what this company is doing. So Maithan Alloys is engaged in the business of manufacturing and exporting of all three bulk ferro alloys: ferromanganese, silicon manganese and ferrosilicon. It is also engaged in the generation and supply of wind power and has a captive power plant. Right, so you heard that they are manufacturer and exporters of three bulk ferroalloys. Right, so first you need to understand what is a ferro, what is a ferroalloy, and what is alloy. All these three words you need to understand what business they are into, what are they manufacturing. So what is an alloy? When you make something by using two different metals, right? When you are using iron and aluminium or iron and silicon, so that's what we call alloy, right? That's an alloy. When we use two different metals, there can be any two metals, right? And what is a ferro or ferroalloy? Ferro or ferroalloy is when you mix a metal with iron specifically, correct? One component should be iron, then that alloy will be called as ferroalloy. A simple two different metals used together to make an alloy, it will be called an alloy only. But when you mix something with iron, then it will be called as a ferroalloy. So they are into the business of producing and exporting three bulk ferroalloys, right? And what are those? Ferromanganese means they are mixing manganese and iron, silicon manganese. So in this they can be doing the alloy of silicon and manganese. Let's see what they are doing. And the third is ferrosilicon. So it is means they are mixing iron with silicon. Now let's see what are their three products and what they are used in, correct? So first is ferromanganese. As we already heard about it, ferromanganese is primarily an alloy of manganese and iron. It contains a high content of manganese and used in steel products, wherein silicon content needs to be controlled at low levels. It is mainly used in silico-manganese production of flat steel, manganese-rich steel and stainless steel product. So now you understand what is a ferromanganese. It is an alloy of what? Iron and manganese. And what is an alloy? Alloy is a mixture of two different metals, right? And what is it is used in? It is used in the production of flat steel, manganese rich steel and stainless steel product. Now their second product is silicon manganese. So silicon manganese is an alloy of manganese, silicon and iron. So three metals are used here: manganese, silicon and iron. It is a cost effective blend of manganese and silicon, and it is normally the product of choice for steel manufacturers. It is consumed in all steel product and used in higher quantities in 200 series stainless steel, alloy steel and manganese steel. So this was their second product. Now their third product is ferrosilicon. So ferrosilicon is an alloy of silicon and iron. Obviously word ferro is used means some metal will be used with iron. So here they are using silicon and iron, right? So it is in a ferroalloy of silicon and iron. So silicon acts as a strong steel oxidant used primarily in special steels and in small quantities in mild steel. Ferrosilicon is also used for manufacture of silicon, corrosion resistance and high temperature resistant ferrous silicon alloys and silicon steel for electromotors and transformer cores, right? So you can see all their three products, what they are manufacturing are majorly used in the production of different sort of steels, right? Here you can see the ferromanganese is used in manufacturing of flat steel, manganese rich steel and stainless steel product. And if we move to the silicon manganese, it is used in 200 series stainless steel, alloy steel and manganese steel. And if we move to the ferrosilicon, then it is used in silicon alloys and silicon steel for electromotors and transformer cores. So from what we can understand is that they are manufacturing something which is very costly first of all, and it is used by steel manufacturers, right? So they are definitely into business of B2B, business to business. They are not selling directly to the consumer, they are selling to the businesses. Those businesses will use their products and will manufacture steel or some electromotors and all, right? As we have seen in the ferrosilicon. So Now when you are doing business in segment of B2C, when you are selling, a business is selling directly to the consumer, creating a wider range of customer is not so difficult. But when you are operating in a B2B segment, then creating a huge customer base is really difficult, and you should create one good customer base. Why is that so? Because if your profits, if your revenues depends upon just 2-3 major buyers of your product, then if those company changes their vendor, or if those company stops their business, then you also go down with them. So now let's see what are the customer and client base does this company have. So here you can see some big names in their customer base. It is SAIL, Jindal Steel and Power, JSW, and Hyundai Steel, Qatar Steel, China Steel, Nippon Steel. So they do have some big customer, and you can see here apart from that a lot of customer. Obviously from looking at general point of view, you'll find that these are very less companies, but they are selling something really heavy metal, right? Iron and metal they are selling. So they are really less consumer of those thing, right? This is a raw product and it will be used in the manufacturing of steel. So obviously the consumer of such product will be less, and looking at that, they have quite a fair customer base, right? So now let's move to their financial statements and let's see how they are doing. So if we move here, we see property, plant and equipment. Now again, this company is into the manufacturing business, so it is important for them to have good amount and right amount of PPE. So it is not just that you should have high amount, but you should also have right amount. So they have reduced their investment in PPE. You can see year ending March 2020, they had 185 crore rupees of PPE, but year ending 2021 they had 172.32 crore of PPE. So just looking at a general point of view, it seems bad, but might be they are doing more efficiently. That's why they reduced their amount of PPE and now they are using upgraded machines. It can be anything, right? For the deep analysis, you can go to the note of 4 subsection 1, right? So you can go there and you can study where this items have changed. I'm not gonna go and look into that. We are just going to look these balance sheet briefly, and we're going to analyze deeply the profit and loss statement. If you see at the inventories also, you can see inventories has increased, means they have produced more this year or they had less sell. That's why their inventories has raised. Whatever the matter is, we will find that out in the statement of profit and loss. So now don't waste the time and let's move to the P&L. So you can see their revenue has reduced by almost 200 crore rupees. You can see previous year they had revenue of 1830 crores, but this year they had revenue of 1619 crores. So by looking at it, it feels bad. So let's see what are the profit they had. So profit for the year they had right here, and which was at 69.41 crore rupees, right? They had a profit of 69.41 crores, and previous year their profit was 57.24. So how did that happen? That they have produced less revenue, but they have produced more profit. So definitely they have increased their net profit margin, right? By reducing, you can see the major change you will find here in the cost of material, right? The cost of material used this year was comparatively less. Then you can see power cost was also less, and major thing other expensive was also down by 17 crore rupees almost. So that's how they worked more effectively this year, and their statement of profit and loss, despite giving a less revenue, they were able to generate more profit for the year. And if you'll see the total comprehensive income for the year, you will find that their last year comprehensive income was at 221 crore and this year it was at 234 crore. So that they did a good business, right? Their profit has increased, their net profit margin has increased. Now let's move to the cash flow statement to find out how much cash they have generated. And here you will find that net cash flow from the operating activities has increased. Previous year it was negative 45. This year it was in positive 116.31. So this is definitely a good sign for any company that their operating profits, operating cash flows are increasing, right? So this is a really good thing. And if we move to the investing activities, so here you can see in the investing activities, they have invested quite a good amount in the investing activities, right? Last year they had a positive investing activities at 696, but this year they had negative of 760. So they did good there also. They're increasing and getting the machines which are more efficient. So net cash and cash equivalent at the year has decreased because they had an outflow in the financing activities. Right here from the financing activities, you can see they had an outflow of 760, right? So whatever it is, their P&L looks good, their operating cash flow looks good. So now let's move to the bullet points that we have put out for all of you to see why we think this company is impressive. So if we move to here, their market capitalization, this is obviously a small cap stock, so their market capitalization is 3,318 crores only. They have promoter holdings right at 75%, so promoters are holding this company very tight. As you can see here, earning per share is fantastic at 227.2 rupees. Their price to earning is at 5.02, which is slightly lower than the industry standards, right? So this company is doing good. Then ROE, you will find 16.35%, good. ROC is at 21.12%, which is fantastic. That to equity is fairly really low, 0.03%. It is a good thing, right? The risk of the equity holders decreases as debt decreases in the company. So again, if we look at the strengths of the company, consistent high return stocks over 5 years in the Nifty 500. This company is with the TTM EPS growth, high TTM EPS growth. So TTM is trailing 12-month EPS growth is good in this company. A strong quarter-on-quarter EPS growth in recent results. We have found that also high revenue and profit growth with high return on the capital deployed and low PE ratio. So this we have seen that their profit ratios has increased because their revenue has decreased, still their profit are increasing. They are working more efficiently. So growth in net profit and increasing profit margin quarter-on-quarter, we have seen that. This is a company with a low debt, so obviously less risk to the equity holders. Increasing revenue every quarter for the past 4 quarters, increasing profits every quarter for the past 4 quarters. Book value per share is also improving from the last 2 years. Company with zero promoter pledge, so their promoters are not holding any shares as pledge, right? So opportunity, if you look at the companies with current TTM P ratio less than 3-year, 5-year and 10-year P, right? So this is a good thing. Profit making companies with high ROC and low P, right? This company is a high ROC company, but their P is fairly low. This is an undervalued growth stock, that's what we think. And companies that show improvement in the net profits, operating profit margin and revenues in the most recent quarter. So the stock with low P because their P is lower than 10, and obviously their P is also lower than the industry standard. So this is it in this video, guys. I hope you liked the video. So please do share this video, subscribe to our channel, and do not forget to share our video with your friends. Thank you so much for watching. See you in the next video.